pricing in on the global recovery with US data looking mixed and China recovery intact? And what impact will it have on risk currencies?
From the performance of risk currencies, especially Asian currencies of late, and also the performance of peripheral yields in Europe, actually I think investors are pricing in quite a sanguine outlook in the global economy. Sanguine in the sense that we are looking for the recovery in the US economy to be sustained. The Chinese economy is bottoming out. Although there would at most be very flat growth in the European economy, that is already pretty much expected by investors. So I think confidence will not be derailed if the European economies are not growing at all.
Tell us about the foreign exchange intervention from Taiwan as well as from South Korea. How effective are these measures?
Now, many policymakers in Asia are quite concerned about the strength of their currencies because that would affect export competitiveness. So we have been seeing Korea trying to put forward some more restrictions on FX forward positions, which hasn't been really very effective in terms of targeting a certain level of the yuan, but it has been very effective in curbing volatility of its currency. And in Taiwan, we have observed that the central banks or some other policymakers are also in the market of quite frequently trying to curb the strength of the Taiwan dollar. Because if you try to compare the Taiwan dollar with the Korean won, which is true that the Korean won has actually strengthened against the Taiwan dollar in the past 6 months. However, if you look back further, like before the crisis, compared then with now, then the Taiwan dollar actually has appreciated against the won for more than 30%. So I think it's really justified more monitoring on the export competitiveness side.
Where is the yuan heading with China's economic recovery in place?
Right. Actually, a number of Chinese data coming out in recent months, they suggest that on a sequential term, the Chinese economy has already bottomed out. And many of the indicators actually are reaching or actually surpassing the government's own target. So now onshore investors are getting more optimistic on the yuan, and we have been seeing that although the spot market is constrained by the band, and now investors are actually going for some very short-dated forward market to try to actually break the strong side of the band, and which happened already.
But the money flows into China is not going into the stock market. What are your views?
There are lots of other access. For example, investor can simply just exchange dollar for yuan at the moment and then waiting for some other investment opportunities. And it seems that the Chinese bond market is also attracting a lot of inflows, especially from sovereign funds, central banks who look to actually diversify their reserve. So overall, although the current account or the trade surplus is narrowing, there could be a lot more portfolio inflows going into China. So on the medium term or even the immediate future, the yuan is still on a very gradual appreciating path. We are actually looking for around 2 to 3% appreciation for next year.